Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, November 10th, 2021. So, the CPI numbers that came out today were better than expected, but we're still at 7.7% inflation, but it went down, instead of up. And that was about all the bulls needed to spark this massive short squeeze, and I mean, it was up over 5%. So this is an exaggerated move. I don't, I think there's just a lot of shorts that got caught on this move right here, and they were forced to cover. Now, this is the channel that I was showing you. And what would actually make sense, because if you notice, we don't have any bearish divergences anymore. We had them going all the way to here, and then the last hour it fixed itself. So what that's suggesting is we'll probably get some type of little pullback, maybe test down at the somewhere at the 38.67, somewhere in this support area right here, and then come back and make its way back up and do a double touch like this right here is probably a perfect example. So what I'm looking for is this right here. So this is A, B, and C, and then we came down. So this is your A. We're going to get a B and then a C if this is going to be the pattern. But this channel, this is what I in the report today. I said, keep an eye if you're looking to take a short. I said I wasn't taking it because I just think it's a little dangerous because of the bullish seasonality. So I would rather wait for the little pullback to look to buy instead of shorting, even though it could work just because of this channel right here. And if we went down to the bottom of it, it's going down to 37.50. But the thing is that, like I said, I think that what's going to happen is going to come down, test these moving averages, hold support in this area, and then come back up. And this is going to be an uptrending line. So it will make a higher high, and that's where we'll set up the bearish divergences. I had showed you in the report today about the NIAID divergence that got fixed. So that's off the table. I wasn't sure if it was going to hold or not, but again, towards the end of the day, it was a pretty strong move in the last couple hours of trading. So it's fairly simple. If this channel is not the say the pattern in play, and we move higher, then we really don't have a whole lot of resistance until we get into the 4,011 area, 4,000, and that would be right in this area here. So I would say somewhere this would be the next upside target, right around that 4,020 level. Now the support on this, which the bulls are going to bears are going to have to get through. The first line is going to be right at this 38.80, say 38.87. But more importantly, it's really actually, you know what? Let's use this. The bears need to get priced below this the 38.63 to get any momentum going on the downside. So that's one. The next support the first support level that we'd be looking at is right at the 39.04. So it's either I can see us coming down to the 39.04 and then coming back up and possibly coming up to where we are in this where this trend line is going to meet, or it's going to break above it and go right through it. But the fact that we don't have any bearish divergences, I think we're going to have to. It's either going to come up here and pull back and then go up, or it's going to start that tomorrow, do some backing and filling, and then go up. But being we're up 207 points, because they're anticipating that the Fed is going to stop easing or start easing on the rate hikes. And I personally don't think they're going to do a single thing, but we won't know that until December. So there's plenty of time for maybe even I said don't count out a move coming up to the 4,100, or possibly even coming up to these levels here at 42.36. I think that it's going to be choppy. I don't think it's straight up, but we're in a seasonality where it's a bullish time period, and then we're going to get probably the Santa rally is going to start right after the Thanksgiving time period. So just be very, very careful shorting, but this would be the spot that I would have, and then just look for it as a trade. And if it gets down to the 38.55 level, that's where you would just take your profits and possibly look long. So that's really about it. This is the channel right here. We don't have any bearish divergences, so that's anticipating what that's suggesting. You can see we do have them here on the 15-minute chart. So that's suggesting that we're going to get some backing and filling, down to the 38.80, 38.50 level, and then come back up again if this is going to be the pattern. But the bearish divergences on the 15-minute chart is suggesting that we're going to get some kind of little say backing and filling on the downside, and then up again. So let's see what plays out tomorrow. Just enjoy the rest of your night, and I will talk to you guys in the morning.